Right, in 1966, the biggest band on the planet released an album called Revolver, and the very first track wasn't a love song, it was a complaint. George Harrison wrote a song called Taxman, and it was about exactly that, the taxman, because the top slice of what the Beatles earned was being taxed at over 90%. The song imagined the taxman keeping £19 out of every 20 and leaving them 95%. The real documented figure was a shade lower, 91 and a quarter, but you can see why nobody argued with the rounding. Now, you're not in the biggest band in the world, so why does a 60-year-old song matter to you? Because the interesting part is what they did about it. The Beatles wrote the song, then made a move. The exact same move a UK company director makes today. They stopped taking the money as people and started taking it through a company. So today, what they actually did, why it worked, and where the same lever helps you and where it quietly doesn't. If you run a limited company, subscribe. This channel tells you what advisors charge by the hour to explain. Quick one before we go on. This is what I do all day, the structuring at CT Private Office, the accounts and compliance at Tax for Pros. Link below if you want to work with me. Back to the band, let me show you how the rate got that high, because it sounds made up. In 1965 to 66, the standard rate of income tax was about 41%. Then, on top of the highest slice of income, came a second tax called surtax, and at the top, that added another 50%. Stack them, and the top slice was taxed at 91.25%. On unearned income, money your money made, it went higher still. Harrison put it plainly years later. In his own words, taxman was when I first realised that even though we had started earning money, we were actually giving most of it away in taxes. That's the feeling every high earner knows. And in 1966, the Beatles had two options: leave the country, which some British stars would do in the years after, or find a legal structure that wasn't taxed at 90%. They picked the structure. Here's the move. Their accountants had reportedly warned them they were in real financial trouble despite earning a fortune, because the tax was eating it faster than they could bank it. And the fix they landed on was to stop being four individuals handing money to the state at 90% and become a business. So they formed Apple. Their income got routed through a company structure, and a company was taxed at the far lower corporate rate, not at personal surtax. Same money, taxed once at the company level instead of taken straight to hand at 90%. John Lennon later summed up the advice they got, reportedly. The accountant said, "We've got this amount of money. Do you want to give it to the government or do something with it?" Now the honest bit, because a tax advisor would wince if I stopped there. Apple wasn't a pure tax dodge. It had to be a genuine business, and it genuinely was, a famously loss-making one. Records, films, a clothes shop that hemorrhaged money. The structure deferred and reduced the tax. It didn't make it vanish, and it only worked because there was a real business underneath it. Tax was a major reason it existed. It was never the only one. So bring it 60 years forward in your company, because the lever hasn't changed, only the numbers have. You can't change the headline rate. Nobody can. But you control how the same money is taxed. Trade through a limited company and the profit is taxed once at 19 to 25% corporation tax. Leave it in, reinvest it, and that's where the tax stops for now. That's the modern version of what the Beatles reached for. But here's the catch they don't put in the song, and it's the bit that keeps this honest. The company saves you real tax on profit you keep in. The moment you pull it out to spend, a second layer lands. Take £100 of company profit and extract it all as an additional rate taxpayer, and after corporation tax and dividend tax, you keep about £45.50. More than half of it still gone. So the win is real, but it's on the money you retain, reinvest and extract sensibly. A proper salary and dividend mix. Rip it all out in one go, and the second layer eats it. The company is a brilliant lever. It isn't a magic low rate on money you take out and blow. This is the everyday version of exactly what the Beatles reached for. The tax game plan is £9, how to pay yourself from your own company without handing over half of it at this year's rates. Link below. Here's the arc, because it's the whole story of British tax in two numbers. In 1966, the top slice of a high earner's income was taxed at 91%. Today, the top rate of income tax is 45%. It came down slowly over decades. Geoffrey Howe cut the top rate in 1979, Nigel Lawson cut it again to 40 in 1988, and by then a lot of the stars who'd fled had drifted back. But look at what didn't change. The first move a wealthy person makes when the state wants too much is still the company. The Beatles did it in 1968. You do it the day you incorporate. The rate is lower now. The second layer on extraction is heavier, and the lever is the same one it always was. And a few of them did eventually leave. Ringo Starr moved to Monte Carlo in 1975, where the income tax rate is 0, but that's a different video and a different lever. In 1966, the Beatles stayed put and fixed it with paperwork. Here's where it lands. George Harrison wrote a song because the state was taking £19 in 20. It's the most famous tax complaint in history. The lesson is in the response. Instead of mourning or fleeing, they changed the structure the money flowed through legally and kept more of what they had earned. You can't vote the headline rate down this afternoon, but how you're taxed on your own company's profit is a choice you make. The same choice they made 60 years on. Same move, lower stakes, still worth getting right. 2 ways to work with me, both linked below. If there's real money on the line and you want the structure in conversation, apply for a call. That's CT Private Office. And if you just want your company run properly, every month, the accounts, the payroll, the filings, that's the Tax for Pros packages page, flat monthly price. Pick the one that fits. If this told you something your accountant never has, subscribe. There's one of these every week. Like if it earned it and hit the hype button under the video in the YouTube app, it costs you nothing and it pushes this to more people who need it.